Hey, it's Rocky here, and in this video I wanted to show you what happened over the last few days in the Dow, and particularly what happened last night in this latest rush for everybody to get out of the US stock market. This is the Dow Jones Index. This is the daily chart, and we've come through here and we've made this big topping formation here where we had our 20 period moving average was down there, but then it was green, and it was red, then it was green. So we've had this topping formation, and then it started to head decidedly down here where we had these two big days down, and then it took 1, 2, 3, 4, 5, 6 days to not quite recover a 2-day downtrend. And that's quite often a sign that there's a lot of downward force, a lot of selling pressure in this market. So we took all of these days to get back up here. We couldn't quite get back up to the high, and then we started heading down, and our 20 period moving average is down, our 8 period moving average is down, and it's just pretty much gone vertical straight down here. So there's no reason anyone should be trying to buy this market. You shouldn't be trying to pick a bottom in this because you just don't know how far it's going to go. So the trend is down on the daily chart. This is our 20 period, this is the 8 period. Trend is hard down, and we've come down here overnight. We haven't quite closed the day yet, but it's down a couple of 100 points, as you can see. Now this here is a 4-hour chart, and I'd like to use the 4-hour chart so I can get my stops closer and I can get my entries sometimes much better than on the daily chart, because you don't get that many entry signals on these. There was no bearish engulfing patterns. There was not even a swing until right down here. So if you're using either of our trading systems, you didn't have a chance to really get short this. There was nothing here to say sell. But when you go to the shorter time frames, you get lots of opportunity. So this is the 4-hour chart, which I go down to, which gives you a lot of chances to get short or get long depending on what the trend is. So I'll open this up, make it bigger, and we'll have a look at this. So this is the last couple of weeks from the 21st of December down to today, which is the 14th of January, and this is that last run up. On the daily chart, the trend was down, and you have this counter trend here, which is like an ABC. Now the trend is down here on the 20 period moving average. We had a couple of bullish engulfing patterns here, which is a good signal that the trend might be coming to an end, this short-term trend. So if you had been short on this because the trend is down, if you had had an entry signal to be short here, seeing two bullish engulfing patterns is a good reason to get out of those shorts, just to protect your profit or to stop a loss if you got in down lower. And then moving averages crossed, we turned up here, had a swing up, came back down, then we had a bullish engulfing pattern here. But remember, the trend is down, so you don't want to be buying these things in here because you don't know how far this is going to go. So we want to be looking for short trades when the daily trend is down. Then we rolled over here, moving averages turned down in here, and then we had this beautiful bearish engulfing pattern here below the 8 period moving average. 20 period moving average is just rolling over there. So you had a good sell signal in here at around 17,320, and then we've come down, we've had another one here, another one here, another one here, then we had a panic sell-off down into here, and then we had this meandering trend across here. This is typical of a counter trend. You see how this is trending strongly. It's leaving spaces between the highs and the lows. It's trending very strongly. This here is typical of what a very weak counter trend looks like. So we've tried to make a high there. It's come back down. A couple of highs, a couple of long tails here. And then today we've just sold off right down, took out this low, and we're probably going to close at around this low here. So how far is this going to go down? Who knows? But there's no way you should be standing in front of a market that's looking like this. And just to look at today's trade, I'll bring up a 2-minute chart and we'll have a look at that. And this is a screen capture I took earlier today of today's trade using a 2-minute chart in the Dow. And we rolled over here, had our first bearish engulfing pattern there, but it didn't confirm because it didn't trade below that low. Then it rallied up 1, 2, 3, and then we had another one here, which gave us a sell signal here. We had another one here, came across a couple of lower highs in a downtrend, another one here, another one here, another one here. So there were plenty of opportunities today to get short on an intraday basis in this downtrend. So we've got the daily down, the 4-hour down, and the 2-minute down. There's no way anyone should be trying to buy this market, and yet all the way through here you can see people are trying to buy. The buyers come in. There could be people exiting their shorts too. They're buying back to get out of their shorts to lock in a profit. But there's just sell signal after sell signal after sell signal. So there's no way anyone should be buying this. You've got all three trends down, and it's a beautiful day's trade in the market. So I hope that helps you to see where you can use multiple time frames to get everything in alignment, and how easy trading can be when you have everything in alignment and you're trading with the flow of the market. Thanks again for watching, and I'll talk with you in the next video.